We're joined by Ken Bernstein, President and CEO of Acadia Realty Trust. Ken, thank you for joining us.
Good morning.
So how would you say the fundamentals in the shopping center sector are looking?
I guess I'd call it stabilizing at this point. Remember, the recession if it's over, it's just recently over. And the consumer is certainly facing a lot of challenges. So while it's too early to call it a full-blown recovery, we're pleased to see a fair amount of new activity, tenant interest, and the consumer coming back and shopping.
And what has Acadia done to kind of stabilize its balance sheet? And are you pretty satisfied with where you're at the moment?
Yes. Fortunately, we did not use a lot of leverage. So even as the financial crisis hit, we were in a fairly good position. That being said, in March, we raised about 15% of our market cap. And while it's always painful to do it in tough times, we were fortunate that we were able to deleverage and buy back a fair amount of our convertible preferred at attractive rates. So it worked out very well for our shareholders. And now we have no debt between now and 2014 that we can't refinance through cash on hand or easy refinancing. So the combination of our relatively strong ratios, low leverage, and the fact that the debt markets are softening some, we feel we're in a good position from that perspective.
And some of the capital that you've acquired, are you going to use that to go out and make new acquisitions in 2010?
Probably. We're sitting on a fair amount of dry powder, both on our balance sheet, and we have a series of fully discretionary investment funds where we have commitments from financial institutions that we can call down when we see opportunities. The key is we can afford to be patient. We have the capital, but when we see the opportunities, we can capitalize on them.
And do you feel like you're seeing some thawing in the lending and secured credit markets?
Absolutely. Absolutely. It's very encouraging to see both the secured lenders and the unsecured lenders in the credit markets come back. Credit spreads are tightening, as we've seen in the unsecured markets, and now we're starting to see the secured markets, both the banks and now with some more recent activity in terms of TALF and otherwise. It's nice to see credit markets inching back to some type of new normal.
And when it comes to commercial mortgage-backed securities, how important do you think it is that that market unfreezes?
In order for us to have a fully recovered, healthy and dynamic real estate industry, I think it's very important. Now we can make a distinction. It does not have to ever come back to the levels of leverage that we saw a few years ago. But we do need the ability to have some type of a healthy, responsible securitization market, and I think we're heading in that direction.
Thank you very much, Ken. I appreciate it.
It was my pleasure.
For more information on this and other REIT news and analysis, check out REIT.com.